Hello, everybody. Thank you for joining us today to this month's call. My name is Chris Glendening, Senior Director of Marketing here at Hashdex. Today's topic is old but not obsolete, Bitcoin's importance in an evolving crypto landscape. To discuss today, joining me is Hashdex Head of Research, Pedro Lapenta, Head of Portfolio Management, João Cunha, and Research Analyst on all things Bitcoin, Santana. Gentlemen, thank you for joining me. Before we jump into it today, two pieces of housekeeping items. First, to disclosure. This month's call and its corresponding presentation are for information purposes only. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. Certain information contained herein constitutes forward-looking statements. Due to various risks and uncertainties, actual events or results and the performance of the products mentioned may be substantially different from those reflected or contemplated in such forward-looking statements. As a result, investors should not rely on such forward-looking statements and should make their investment decisions through investment research. And second, there will be a Q&A at the end of the presentation, so we do encourage you to participate by using the Q&A feature at the bottom of the screen. With that, let's get started. Just a little bit about Hashdex, in case those of you joining us are new to us. We're a leading crypto-focused alternative asset manager founded in 2018. We exist to bridge the gap between traditional financial markets and the crypto economy with simple, secure, and trusted regulated products. We have a strategic partnership with Nasdaq. We co-developed the Nasdaq Crypto Index and the NCIE, the European counterpart of that index. It's basically designed to broadly track a rapidly evolving asset class and serve as the trusted benchmark for digital asset investing. Additionally, we have the Nasdaq Crypto Academy, an academy for registered financial advisors in the United States. And if you want more information on that, please head to our website. And really, when we talk about Hashdex, we really are a global financial advisor, a global asset manager. We have products in a number of different countries across the world, both in Latin America, Europe, and the United States. Most recently, we launched the Nasdaq Crypto Index Europe ETP in Germany, France, and the Netherlands, as well as the Hashdex Bitcoin Futures ETF here in the United States in coordination with Ethereum. It's the first of its kind with a 33-act wrapper. And with that, let's get into the meat of the presentation. To start us off, we'll turn it over to João Cunha, Head of Portfolio Management, to sort of give us the outlook of the NCI and all things macro market updates.
All right. Thank you, Chris, and thank you all for watching us. So let's talk about last month. So in September, macro factors had a major impact over traditional risk assets. Equities, especially, you're all following what's going on regarding inflation and recession and geopolitical threats all around. So S&P 500 had one of the 10 worst months since the 80s, dropped more than 9%, and some other relevant stock index also plunged all over the world. So in such a difficult, such a hard season, and especially when we consider the correlation between crypto and traditional risk assets that prevailed through the year, it would be normal or reasonable to expect that crypto would suffer even more, but fortunately, it didn't happen. So the NCI showed, I would say, more independent or less correlated behavior during September, and it dropped only, let's say, only 5.1%. It was good considering the situation. And there was another relevant decoupling that was between Ethereum and the other crypto assets after the merge, especially. So the merge was an update on Ethereum. It was successful, but after in the months prior to the merge, there was so-called the merge trade, where investors was long, creating long positions in Ethereum, in short, in Bitcoin or Solana mainly. And after the event, they started unwinding these positions, and it forced the Ethereum's price down. So Ethereum ended up the month dropping 12%, the worst performance among the NCI constituents, while Bitcoin dropped less than 2%. So it was unusual for the two major crypto assets to have such a different behavior. And I would also point out that the NCI was outperformed by the thematic indexes tracked by Hashtag's products, DeFi, Web3 or smart contracts and digital culture. But most of these differences can be explained by different exposures to Ethereum. So Ethereum was like the main reason for this outperformance. NCI is the most exposed to Ethereum. So this, in a nutshell, what happened in September, and now I'll hand it to Lucas Santana.
Well, thanks, João. Well, hello, everyone. I'm glad to be here. Thanks for joining us today. And well, the main topic of today's presentation is Bitcoin and its importance in what we believe is a very promising and evolving crypto landscape. And to start this talk, basically, I'd like to recap and say that crypto as an asset class and as a technology has gone through an unrivaled period of innovation in recent years. And we have several examples that illustrate the kind of innovation that we have been experiencing in this asset class. So for one, we have decentralized finance, which today DeFi is basically one of the key use cases for blockchain technology. And we've seen since 2019 the emergence of several applications related to the financial system being built on top of blockchains. We also, as João just commented, had seen a successful Ethereum merge in September, which was this major upgrade in the Ethereum blockchain that changed how it provides the security and how it registers information into the blockchain for the flagship smart contracts platform. And a third example that we can mention is the advancements in scaling solutions. So essentially the ability, maybe in the future, for users to be able to use blockchain and all the applications that revolve around this emerging technology in a very fast and cheap way. And despite all of this, we may wonder, what about Bitcoin? So what has been going on in Bitcoin itself? And today we are exactly going to discuss some of the things that have been happening in Bitcoin throughout those years. And also these are major indications of what we can expect for the largest crypto asset by market capitalization in the coming years. And to start the discussion, I like to recap on what Bitcoin is. So the way I like to think about it, it's basically this purely digital form of money, and it separates the idea of money from the state, for instance, because it's powered by a network which is permissionless, so anyone can use it without asking for permission of a central authority to interact and use this network. It is decentralized because basically the network is not controlled by a single authority. It is distributed across the globe. And it's also censorship resistant because it allows you basically to post whatever you want and send value for whoever you want at any point in time. And I just said value because the main idea behind this network is for people to be able to transfer value from whatever, from them to other people elsewhere. And this can be done at any time of the day, any day in the week, any week in the year. And this monetary system is powered by a crypto asset, the largest crypto asset by market capitalization, which is BTC. And in the architecture of the Bitcoin network, we have a pretty predefined issuance schedule for this digital asset, and also a total maximum supply. And basically, this chart here in this slide shows what is the expected, and it's been playing out like it's shown here. What's the expected issuance schedule for Bitcoin, which is set in stone since day one, and has been putting Bitcoin into circulation until like 100+ years from now, we reach the last fraction of Bitcoin, and we arrive at the 21 million Bitcoin supply. And this idea, when we compare it to like gold or fiat currencies, is really interesting, because imagine that now you have this network which is not controlled by anyone, but actually is a composition of a lot of individuals cooperatively interacting all across the globe to build it. And then you may think of using it to transfer value. So consider, for instance, having the ability to store and transfer with very little cost, like $1.8 billion. Well, today this is possible with Bitcoin. I use this analogy or illustration to do a comparison between trying to do this today with gold and doing this with Bitcoin. If you were to transfer like $1.8 billion in gold, you would need around 2,700 bars of 400 ounces of pure gold to have all of these $1.8 billion being represented and transferred in terms of gold. And of course, we know this would be a very challenging endeavor to make, because you would need to secure it, and the transfer of this would cost you a lot. Whereas in Bitcoin, if you check in any web explorer on the internet, you can see that this QR code that I'm showing here in the middle bottom figure holds exactly or approximately 1.8 billion in BTC, and this can be transferred quite easily with very little cost without asking for permission to anyone. So the idea here is that Bitcoin really makes you think of a very elegant and secure way to store wealth, store value, and to transfer this with very little costs. So if you compare it to gold, it has, with that monetary policy, several traits which are very similar to gold, but some of the things like portability and verifiability are so much more easier and fast to implement for anyone that wants to use this network to transfer value. And of course, as this idea starts to be perceived by a lot more people, we have been seeing the growth of this network until today, until its current state today. And when we say that Bitcoin is growing, actually we mean that it's growing really quickly. If you compare this as a technology, for instance, to 4 of the big tech companies that we have today, Bitcoin took only 12 years to arrive at the market capitalization of $1 trillion. If you look for Google, Amazon, Apple, Microsoft, on average, they took around 33 years to reach the same market capitalization. So this idea of having this asset that has a digital form and accounts for the storage of value is steadily gaining a lot more traction and growing quite quickly when we compare it even to huge technology companies worldwide. And on the chart on the right, I also show the emerging store of value thesis of Bitcoin starting to show some indications of actually taking place. This chart basically shows that when you look for the coin ages in some holdings for Bitcoin, as you consider longer intervals of time, the percentage of Bitcoin circulation that is being held by investors for a longer period of time is increasing. So we can say that this is more or less like an indication of the perception of investors that maybe this is an alternative as a store of value, which today is of course being still tested, but maybe a few decades from now could really be an important part of let's say, the safe haven options that investors may have when thinking of something that can store value for their wealth. And well, after recapping what Bitcoin is and what Bitcoin has Bitcoin achieved so far, I think now we can move to some of the things that have been happening in Bitcoin and perhaps a little bit out of the radar for most people, but still that indicate that maybe Bitcoin has what it takes to continue this expansion and to continue thriving. And to start discussing this, I think the first point it is that, well, it is the most battle-tested blockchain. And what I mean by that is that, well, if you want to give all those guarantees and this ability to transfer value, one of the things for a network to have this possibility is to have very high uptime. If you look for the statistics regarding Bitcoin on this subject, you're going to see that Bitcoin, since inception in 2009, January 2009, it has an uptime of more than 99.98%. So basically, it has never stopped for any relevant period of time. And since 2013, it didn't have any halt. And this is relevant because once it really started reaching this critical mass adoption, it's really important for it to not stop. And Bitcoin today is, in fact, the most battle-tested blockchain in this respect. Another important feature of it is that the security of Bitcoin, which is done by proof of work, or if you want, mining, it has been tested in it for more than 13 years now, almost 14 years. And also, if you look for Ethereum, which is the second blockchain by market capitalization, proof of work was also the core engine behind the second blockchain in the market today for more than 7 years, until last month, as we discussed in the September monthly call, Ethereum moved to proof of stake. But that's to say that proof of work has been really tested in the two most valuable blockchains in the space today, and it's showing several indications of its resilience. And I give here an example. For instance, in mid 2021, I think this news became quite famous at the time, that China once again banned mining of cryptocurrencies, and in particular Bitcoin. And here on the chart on the right, I show the computational power of the Bitcoin network. And if you look, since the mining ban, we had a pretty significant drawdown, or in other words, a decrease in the computational power that provides the security for the Bitcoin network. But its security model, proof of work, has what we call the difficulty adjustment. So the network is able to adjust itself to this new computational power, and people were able to turn off their machines in China and relocate to other countries. And after some time, after some small period of time, a few months, we've seen actually the hash rate or the computational power of a Bitcoin blockchain reach new all-time highs. And one specific point I would like to stress here is that since late 2021, we have been in a crypto bear market together with other risk asset classes. But the hash rate or the computational power of Bitcoin has been still growing. So even though we had a pretty significant drawdown in Bitcoin's price, there are still a lot of people around the world cooperating and providing the security to the most secure blockchain in the space today. The second point I think it's important to stress, and it goes in the direction of comparing Bitcoin perhaps to other blockchains, is that when we look, for instance, to Ethereum or Solana or the blockchains in the space, and we compare them to Bitcoin, I think it is a fact that Bitcoin evolves quite slowly in comparison to other blockchains. But one point to stress, which I think is important, is that even though upgrades do not occur really fast in Bitcoin, key upgrades come whenever it's really necessary. And this basically goes to improve technology, the technological stack and the capabilities of the Bitcoin base layer. I can give you some examples. For instance, the ability to have your custody, your private keys being stored in the form of seed phrases and using multi-signatures, which really eases the process of custody for BTC, while also giving the ability to have multiple parties having one specific key. And then when you want to move those funds, you have to sign with different keys to have the ability to move those funds. This seems to be something simple and not really that important, but if you think of custody, this is really important for the ability for instance, to have very secure institutional custody of BTC. And two other topics or examples I would like to mention is one that happened in 2017, which allowed the registry of information on the Bitcoin blockchain to be more efficient, which is what people call SegWit. And last year, we had also a major upgrade called Taproot, which also gave some new possibilities to the Bitcoin blockchain, as I'm going to discuss in the next slide. And one thing I think it's important to stress here is that the reason we can say Bitcoin evolves slowly is that people that are developing the technology, several individuals cooperating worldwide, they really think that there are some key features of Bitcoin that should be always kept unmodified. One of these features is that issuance and monetary policy that I discussed in the very beginning. So all of these upgrades, they keep that monetary policy completely unmodified, which is really important when we think of the value proposition of Bitcoin and what it pretends to be. Intends to be. So, and one other aspect I think it's worth mentioning is that these upgrades, they are backwards compatible, basically meaning that if you don't want to use a new functionality on Bitcoin, you can choose to do so. You can just completely disregard it and keep using the network with those same fundamentals and utility that it has since the very beginning. And this essentially summarizes the fact that, yes, Bitcoin is upgraded more slowly, but it is upgraded whenever it's necessary without changing its core fundamentals. And these upgrades, they are allowing several applications, perhaps not to be built on the Bitcoin base layer, but to be built on top of Bitcoin and to leverage the security and other guarantees of the Bitcoin base layer to provide a lot more utility for end users. I can give here three examples. The first one is the Lightning Network, which is something that is starting to gain a lot more traction in the past year, which is a second layer leveraging the security and decentralization of Bitcoin to bring much faster and cheaper transactions for users. On the top right chart, I show the number of BTC that currently is being deposited as liquidity for people to do micropayments. So basically the ability to pay for a coffee using Bitcoin without having to wait 10 minutes, the usual 10 minutes of the base layer, nor pay any type of high transaction fee. And as we are seeing in this chart, even in this recent period of market drawdown, the liquidity, I mean, the amount of BTC that is being used in micropayments, in payment channels on the Lightning Network continues to rise. And actually, it's even rising much faster, even in the bull market, when we compare it to, for instance, 2020. So I think that's a good indication of a specific utility solution that is being built on top of the Bitcoin network that is giving a lot more speed for BTC to really be transferred and used as an actual currency. Two other examples, which I think are also illustrative of these applications being built on top of Bitcoin. The first is the Liquid Network, which is basically a sidechain, also allowing faster, cheaper, and even more confidential transactions using Bitcoin. And this sidechain has like its own form of Bitcoin pegged to the Bitcoin on the base layer. And the ability for people to use this not only gives them more flexibility and faster transaction speeds, but also in this network, you can use Bitcoin and trade it against other assets such as stablecoins or NFTs. And this also expands the ability of Bitcoin to be this exchange asset when compared to other digital assets. And the third example I'd like to stress here is WBTC, which is a synthetic asset which is backed by Bitcoin, but lives on the Ethereum blockchain. And this basically allows Bitcoin to be used on the flagship smart contracts platform, and for instance, be deposited as a collateral. And so people can not only borrow against it, for instance, stablecoins, or even capitalize and earn an annual yield on top of the Bitcoin they have. And one other thing that I would like to add here and mention is that recently we had the beginning of the testing rounds for a new protocol that is being built on top of Bitcoin and the Lightning Network, which is called Taro, which essentially will be able to provide Bitcoin, the base layer, with the ability to have built-in assets being constructed on top of it. So we can wonder, perhaps in the very near future, we may start seeing a whole ecosystem of decentralized finance, which today is very strong in networks such as Ethereum, also being built on top of the Bitcoin network. And again, this increases the utility and the ability for people to really construct a lot more applications on top of the most secure blockchain in the space today. And now moving forward, not only when we look at the technological and utility being built on top of the Bitcoin network, we see a lot of improvements and advancements in the past several years. But when we think of Bitcoin as an asset that is really starting to be considered seriously by several institutions around the world, we see that, for instance, BTC is, we could say right now, is the digital asset with the most regulatory clarity that we can see today throughout the world. If you think of Latin America, Europe, we can see that regulation in Latin America and Europe is already advancing at a fast pace. But also in the US, recently we start really seeing regulators working to bring a definite framework for crypto assets. And in particular, for BTC, it looks like the road ahead is much less uncertain. And this is basically because if you think of the SEC or the CFTC, they both consider Bitcoin in the US a commodity. And this is mainly due to the fact that BTC had, since inception, a neutral token allocation. There is no prospection of public funds to develop the technology, nor does it pay any dividend or promise any profits to its investors. So if you think of the Howey test in the US, which people use, regulators use to assess whether an asset should be deemed a security or not, Bitcoin has several features that don't deem it a security. And exactly because of that, the CFTC is the actor, the regulator under which Bitcoin as an asset should be regulated. So the idea here is that when you think of institutional investing, BTC, when compared even to Ethereum or other digital assets, it really has a much less uncertain road ahead, and the likelihood, I would say, for it to be deemed a security is really small when compared to other digital assets, which is something really important when you think of an institutional from an institutional standpoint. And I think to summarize and then leave it for Pedro to wrap it up, another key point that we should keep in mind when we think of Bitcoin, so we saw its value proposition, we saw the advancements in the technology, some of the applications being built on top of it, and also its regulatory clarity is a lot better when we compare to other digital assets. All of these combine and are really indications of why BTC is being adopted by institutions and even sovereign states worldwide. If you look on the table on the left here in this slide, you can see that if you consider listed products like ETFs, ETPs, we have already a pretty significant number of BTC and of value in terms of market capitalization being held by these products. We also can see countries like El Salvador, which even though it's small, it's still a sovereign state, which in 2021 adopted Bitcoin as legal tender. So basically people can transact in Bitcoin in the country and also pay taxes with it. And a third aspect, which I think is worth mentioning here, is that the number of gateways giving exposure to BTC for institutional investors is quickly growing. And this can be said even in the US. If you think of, for instance, BlackRock launching a private trust, which gives a spot Bitcoin product for institutional clients, this happened last August. If you think of Fidelity allowing retirement savings to allocate to Bitcoin in 401k accounts, this is a clear indication of institutions, and not small ones, really starting to consider BTC as one of the protagonists and perhaps the best and ideal entry point for people to really start diving and really allocating into the crypto asset class. I think I can now hand it over to Pedro, and so that he can summarize everything that we talk about here, and then we can open for questions.
Thank you, Lucas. Great presentation. Thank you all. It's a pleasure to be here with you. So just to wrap up, we're going to give you, our view on the investment thesis of Bitcoin. How do we see it? How do we see the risk reward after what João and Lucas talked about during the presentation? Obviously, the macro scenario is very tough. We're not going to speculate on outcomes here. It's a very tough job to do. Everyone in the world have doubts about it. But what we're trying to give you here, the perspective that we're trying to give you here is that, first of all, here at HashDex, we think, we encourage responsible investments in crypto. This is a technology that it's under development in its early stages, so there are risks, right? So we talk to clients all the time, and we tell them, size it appropriately, develop your investment thesis in the appropriate time frame, understand what you're buying, and for Bitcoin is no different. We see it as a long-term investment, and that has the potential to being in most of the world's portfolios, right? So what's the opportunity here, right? So and we're going to talk about the risks and the rewards. Obviously, the opportunity that is most commonly talked about is the store of value opportunity. People understand it, and people have made calculations about it, and we bring this calculation of the store of value because we believe that Bitcoin has characteristics, as Lucas mentioned, to be the digital gold, or even better than digital gold, right? So we're talking about, in aggregate, the society believing in the store of value in the total amount of $11 trillion. That's the market cap of gold today, which is the consensus store of value in society, right? And we dig a little deeper, and we have some analysis that guide us, that says, around 10 to 11% of these $11 trillion is the real industrial demand for gold, right? For industrial purposes, for jewelry, for ship making, and for other smaller uses, right? And the rest, the 90% of the $11 trillion, is what society believes and rests its money on gold for store of value purposes. And then when we compare Bitcoin's market cap, currently at $370,000, and we say that it has even better sometimes features for a store of value purpose than gold, we can say that society over time will consider Bitcoin a store of value, and then it has the potential to eat away gold's market share, right? So this is something. So we're talking about $350 billion today to $11 trillion over time, but what we're trying to bring here, with this topic, is that this is one piece of the thesis. Store of value is one piece of the thesis, but the other one, which we think is the utility of Bitcoin, is increasing. Okay, so that's what Lucas mentioned, about the technological advancements that are happening on top of the base layer of Bitcoin, and what the upgrades were, and how it is evolving, although at a slower pace. And we see this as a feature instead of a bug, right? So it's bringing more utility to Bitcoin network and its native currency, and we think that this is an optionality for the investment case in Bitcoin, right? So, and on top of that, given the characteristics of Bitcoin, we think that it has the potential to be considered, and this is kind of a new concept that the world is seeing. Something's called the pristine collateral for the new digital age, right? For anything digital, because its durability, because of the super predictability of the monetary policy of Bitcoin's native token, and mostly because of the impossibility of having more than, or close to impossibility of having more than 21 million Bitcoins ever minted. So the concept here is that this collateral will not be diluted away. It will remain constant over time, and we think society over time is gonna see this with good eyes, and there's room for Bitcoin staking in several portfolios worldwide. Okay, so those who are buying at $20,000 today or at $370 billion of market cap is looking at the store of value, this $10 trillion, addressable market that it can eat away potentially, plus the optionality of having a lot of other stuff, as Lucas mentioned, going on in the Bitcoin network. Okay, so it's a little tough to define what Bitcoin is, right? So is it a currency? Is it a commodity? Is it like gold, digital gold? Is it a payment rail, or is it a technological platform, right? So how do we see this? We think it's all of them. That's one of the challenges, for people to understand it over time, and we think people will see it over time. All these values that the Bitcoin network provides. So that's how we see the side of the opportunities, and obviously on the risk side, because there are risks. I'll name a few here, but we can discuss them further if you guys have any questions. Is that obviously the number one, in our opinion, is that the risk of Bitcoin being regulated out of existence, right? In several ways. But we think, it's our opinion, as we've shown here, this risk is reducing dramatically. Obviously, if we were talking about this risk 5, 6, 7 years ago, we would have a different opinion, but we've seen consistent and increasing evidence worldwide, and we're seeing this from a privileged position of being a global asset manager, and doing business in 7, 8 countries now, and going to more countries. This is not the way that it's going, and we've seen the example of the U.S. most recently with the White House framework being put out, giving more clarity and giving good perspective, on how regulation should be done in the U.S. and with the global bias, because this is a global asset class. So from this point of regulation, we think the risk is tilted to the positive side. Okay, we think it's gonna be adopted worldwide in a good way. Obviously, it has to deal with stuff that is prejudicial to end users sometimes. Hacks is still going on. These things is all good, have to be regulated, but the overall perception is that it's going to go to the positive side. And another point is the technological issues of the network. And then Lucas pointed out, it's not obsolete. It's not going to be considered old and people are not going to use. We don't think that's the issue. The issue of hacks is not an issue. Right, we've seen it. The Bitcoin network been working since 2009, pretty much, intactless. So from the hacks point of view, and the last risk is the risk of not being adopted. I think it decreases, every single day, as we're pointing out. Institutions worldwide, regulators worldwide are looking at it. So all these risks are reducing at the same time that the opportunity is increasing. So we think it's a tremendous moment, to consider, doing, small occasions. That's what we consider. It's the idea for those, who are new to the asset class. You're still understanding the investment thesis, and we understand it's hard, it's complex. So we try to bring you guys here, all these views and the big opportunity that's in front of us. So with that, and one last point that I noted here is that this concept in crypto is super important. It's called the Lindy effect, right? So Bitcoin has been around for 13 years, and this concept is super important because it says, the longer you survive, the higher the probability that you're going to continue surviving going forward. So this is good for Bitcoin. It's been tested. It's gone through several crises, several 70% drawdowns and problems. And and it's been working, 99.999% uptime, no hacks whatsoever, and developing new utilities. So that's how we see it. It's hope you guys enjoyed the conversation, and we're open for questions.
Yes, thank you so much, everybody on the call. I mean, this has been fantastic. And so, yeah, with that, I want to open it up to questions. If you have a question for one or all of the panelist members, feel free to use the Q&A at the bottom. We do have a number of questions that have come in. And first, I think it's worthwhile addressing some of the sort of challenges and threats that, Bitcoin faces, from a macro perspective. And one of the things that we didn't mention that I don't want to get the panelists' thoughts on was the European Commission, recently announced that crypto mining may need to be halted due to the energy crisis that they're facing in Europe. I wanted to get your opinions on what that means for Bitcoin more broadly, but obviously the mining operations, many of which are in Europe, what the short-term, the medium-term investment case for Europeans is as it relates to Bitcoin.
I can take that, Chris. I think this is a very good question and a point to be discussed in society. Some of the hash rate that that Bitcoin network has, or the computational power, is provided by computers being run using some form of non-renewable energy or expensive energy, and especially in current European situation, you can understand from a regulatory perspective and from a government perspective that they can try to address this point, right? But what happens? What's the consequence to the network? We think if a lot of this computational power is turned off in Europe, it will have very, very low impact on the overall security of the network. Okay, we've seen first of all the hash rate today is super high. It's at an all-time high. It's super secure, and it could afford to lose some of it. Okay, and as we've seen with as Lucas pointed out in his graph, it happened. There was a concentration of hash rate being in one specific jurisdiction, which was China last year, and it was banned, completely banned, and the hash rate divided by 2, and then we're now back at higher than it was before by 50%, right? So, but during that point, the network continued working 24/7, clearing out all the transactions. No problem whatsoever. So from the standpoint of the network itself, I don't expect any problems if Europe decides to shut down or temporarily shut down mining operations in the region.
Fantastic. Yeah, and just to go off the mining question, we have another question from an audience member in relation to a degree. How do mining rewards relate to the security of the BTC blockchain, and particularly after the last Bitcoin has been mined?
Yeah, sure. I can take that one, Chris. Well, that's a good question, because today, if you're a miner, you receive basically 2 types of rewards. The first one is issuance of new BTC, which for every mined block today is 6.25 BTC. And you also have transaction fees. And these transaction fees, which are supposedly the maintainer of the incentive for miners in the future, once you don't have that many more BTC being issued, so that they have the incentive to continue providing the security to the network. And specifically, when we talked about all the utility that is being built on top of Bitcoin, we have to also take into account that every now and again, these applications will have to post information on the Bitcoin blockchain. And whenever they do this, if we believe that this thing is really resilient and may see a lot more adoption in the coming decades, we may see the value of transaction fees really going up, so that miners will have the necessary incentive to keep the network going. And as we always say, this is a network. Networks build network effects as they grow. And there will be a tipping point where eventually we will see these network effects create the necessary competition for fees to be paid. And this competition for space in the Bitcoin blockchain is what we believe will make it sustainable over the long haul. Of course, today, this is still a point of discussion. It's even related to the last question, because this is still a challenge, but we have to think that this network is a completely different animal, right? It's a different beast, and it has a built-in incentive system, which is still under development. And as soon, and if the thesis of Bitcoin as this global settlement layer for several applications really pans out, then this issue will eventually fade away, and miners will keep providing the security for the network without really having to rely anymore on a lot of issuance of new BTC.
Yeah, I think that's really helpful. Another question here from an audience member: Can you explain how the settlement layer and the comparison to Fedwire use case feeds back into the BTC price? Lucas, I don't know, you want to take that one?
Yeah, sure. Well, that's also a good question, because as Pedro mentioned in the last slide, if you think of BTC only as the store of value thing, then you don't really have a lot of activity on the network. But if you think of it as this global settlement layer, then there will be a lot of demand for block space in the Bitcoin blockchain, essentially the ability to post in a very secure, decentralized, censorship-resistant way important information in this distributed ledger. And as this demand increases, people will, of course, have to transact on the Bitcoin base layer. So this demands BTC, and eventually this will generate demand for BTC. So naturally, increasing the demand and given this max supply and the offer, which is already predefined in code since day one, then this could affect positively also the market capitalization of BTC, the asset itself.
Yeah, that's fantastic. And then last question here from an audience member, João Marco, I think would be best directed towards you. How strong is the case for Bitcoin if central banks stop quantitative easing and go back to a more orthodox central banking or in a rising rates environment?
All right. This is not an obvious question for sure. There was a narrative around Bitcoin being hedged against inflation, and so far it didn't prove it itself as a good hedge for inflation. But we believe that even with no inflation at all, in an environment where the central banks are succeeding in controlling the inflation, Bitcoin has other features that allows it to be competitive when we compare to fiat currency. So it had the censorship resistance. It's decentralized. It's really global. So, but actually, what I believe is that we have cycles, and for sometimes in some seasons we will not see the people worrying that much about inflation. For example, if we consider the period between the Second World War and the oil crisis in the 70s, people was not that worried about inflation. After inflation comes, and people started thinking about inflation as a huge problem, and we have the 2-digit interest rate is in the US in the 80s to handle the inflation. So I don't believe that we will get to a completely steady state in terms of inflation. There's a bias for the governments to try to print more money in certain situations, and it will happen over and over. So it's a cycle, in my humble opinion, and Bitcoin is completely out of this cycle. So so sometimes the case will be stronger and sometimes it will be weaker, but Bitcoin will keep its pace of minting, regardless if you are in a recession or in a bull market. It doesn't matter. So
yeah, and just to jump off of that with a question from me, I think, you know, one of the things that we mentioned a little bit on the fringes in the presentation is the correlation between Bitcoin and sort of the traditional equity markets and growth equity, particularly in that sense. And so I guess for each of you or one of you, what are the catalysts of decoupling between Bitcoin and the sort of traditional growth equity markets, do you say, in your opinion, Gianmarco?
I think that once Bitcoin really becomes a widely accepted store of value, and I believe that an important step to achieve this status is becoming either especially an exchange mean, but it can also happen if it becomes a price reference. So we have, I believe that one of these two things must happen before Bitcoins gets the status of a store of value. Once it becomes a store of value, so there's like an anecdote regarding how the traders behave in when the environment is increasing risk. So right now they say, oh, I have to reduce my exposure to risk assets, so I'll reduce Bitcoin. And we believe that once they internalize that Bitcoin is a store of value, and they start saying, oh, I have to, I'll sell equities and buy Bitcoin. So this is the turning point. So of course it won't happen in 3 or 4 years. It will take longer, and not necessarily will happen. We have several threats on the way, but this is like the turning point, the mindset change.
Yeah, that's a great point, and I think a great place to end there. So unless anybody has any additional questions, I want to thank everybody for joining our monthly call. If you wanted more information on anything Bitcoin, please head to our research center on hashdex.com. We have a number of products that have Bitcoin in our holdings, so feel free to visit the website as mentioned. And thanks everyone. Have a fantastic day.